Hi everyone. Today I'm going to start a new lesson, which is an extension of the previous lesson of financial statements. And this lesson will be known as adjustments to the financial statements or adjustment entries. So let's see what these adjustment entries are. Before going to that, I will like to pay your attention towards some relevant accounting concepts, which is highly relevant and which you'll be giving better knowledge in A levels. But according to my knowledge, I hope these concepts, some of the concepts, few very simple concepts, will help you to get a better understanding about these adjustment entries and financial statements. Okay. Already we have been undergone these concepts and we have used these concepts with regard to the previous lesson. Let's see what they are. The first one is the entity or the unitary concept. What it means is the business as one unit or as one entity has a separate existence from the owners itself. That means the owners or the owner and the business unit, registered business, has will be treated as two separate entities, and thereby only we will be able to do this accounting process. If we are not considering the business and the owners as two separate entities, you can't formulate the basic accounting equation as assets equals equity plus liabilities. So thereby, the unitary concept or the entity concept means, in simple terms, the business itself has a separate existence, separate from its owners. Then the number two will be the monetary concept. As I have told you earlier, all the transactions which we can measure in terms of money only will be considered when we are preparing the financial statements. So that means monetary concept or the cash concept is that. Thereby, when we are preparing the two financial statements, on top of each financial statements, we have mentioned the type of currency. With regard to ourselves, we have put rupees. So that is regarding the second concept. The third concept is the accrual concept, which is given in your textbook as well. That means that is the most relevant concept when we are preparing the financial statements and the adjustments. As I have given here, the accrual concept is this. I'll explain it. In simple terms, accrual concept is whether you have received an income or whether you have, even though you have not paid an expense, if it is relevant for the accounting period, you have to do accounting for the income or the expense. In the book it says, irrespective of the amount received in cash, the total income relevant for the period should be recorded, as well as irrespective of the amount paid in cash, the total expenses relevant for the period should be recorded. So even though you have received in cash or not, if some amount or an income is relevant for the accounting period that you are considering, you have to indicate it in your financial statements and you have to do accounting for that. And in the same way, there can be expenses which we have not paid already. But for them also, if they are relevant, you have to keep records or accounting for the expenses as well. Okay, now here I have given you another accounting period or a financial period. It starts from 1st April 2018 and it will be end up, I mean after 12 months it will be end up, or the last date will be 31st March 2019. So that means now if you have not received any amount of income or expenses during this given 12 months or the accounting period, if it is relevant for the period, you have to keep accounting for that. Okay, then we'll come to the now, yeah, let's see what this adjustment entries means. Then this adjustment entries means now according to the accrual concept, if you have received or not, now how it happens is practically in a business within these 12 months, some incomes will not be received by you practical to the business. The cash won't be received to the business. That income won't be received to the business. As an example, you can take interest income to be received. If you have a fixed deposit or a savings account in another financial organization, so the interest income relevant for the last month, for the month of December, you won't be receiving it at the midnight of 31st of December 2019 to prepare your accounts. Practically, it won't happen. So, but when you are preparing the profit or loss for the period, you have to consider that last month interest income as well. In the same way, there can be different types of expenses: electricity, telephone, rent. All these expenses you won't be able to pay at 31st night itself. So practical. So therefore, even though you have not paid them for the relevant parties, it is your duty, or when you are preparing accounting the financial statements, we have to account for that last month rent or the telephone bill or the insurance payment, electricity payment, all these things we have to consider as we have paid. So simply that is what it means by the accrual concept. So when we are doing these relevant treatments in accounting for such practical situations, we will be name them as adjustment entries. Adjustment entries. So let's see what these adjustment entries are. So according to the accrual concept, we must, even though we have received or not the incomes and expenses during the period, when you are preparing the profit or loss and the statement of financial position, we are supposed to consider the total incomes relevant for the period and the total expenses relevant for the period, and accordingly the changes which will arise in the assets, equity and liabilities. Right? So that will be done using the adjustment entries. So adjustment entries, let's see what these adjustment entries are. Adjustment entries that are required to present the financial statements with the most relevant and accurate figures are called adjusting entries. Now, if we are not, here I have shown you the examples. Electricity expense payable, it's an expense, but it is payable. We have not been paid it. Actually, no cash outflow has been occurred at 31st December itself. But when we are preparing our accounts, we have to treat this electricity expense of the last month as well. Then the second one, interest income to be received. It's an income which we are going to receive. So that also we have not been received from an outside party as an inflow to the business. But if we calculate our profit without considering that income, so our profit figure will be a wrong one. So the stakeholders who are making decisions about the business are not very accurate at that time. So if we are not treated the electricity expense also like that, then again we are ending up with a wrong figure, wrong profit. Then bank loan interest expense payable. Let's say for the last month. So practically midnight 12, we won't be going to the bank and paying the bank loan interest expense for the bank loan that you have obtained for the bank loan that you have obtained. So then we will be practically paying it after this final date or the last date of the accounting period. But you have to consider it as you have been paid it already within this accounting period ending on 31st March 2019. So thereby, again, it's also an expense. So you will be end up with the accurate figures in your financial statements, and they will be most relevant and accurate. Okay, going back to the same thing again. Adjustment entries that are required to present the financial statements with the most relevant and accurate figures are called adjusting entries. So these are few examples of that. So when you are doing accounting, it's, as we have already known, it's a process, and we have to start this process with the prime entry books. So when we are doing this accounting adjustments, so what is the prime entry book that we are going to record this? We can't record this in the cash book. We can't record this in the petty cash book. We are not in a position to record them in the purchases or the sales journals. Not in the bank account. Then where are we going to record this? The only place, the only prime entry book where we can record this adjustment entries are the general journal. That is the general journal. So when we are doing adjustment entries, we will be recording these adjustment entries in the general journal as the books of accounting. Okay, with that in mind, we'll see what are the objectives of or the importances of these adjusting entries in preparing financial statements. There are few importances or advantages. The first one will be the balances in the ledger accounts can be updated as at the end of the accounting period. The balances in the ledger accounts can be updated at the end of the accounting period. Otherwise, the balances that you are taking to prepare the financial statements in the trial balance will be wrong. So therefore, that is one importance. The second one, the operational results or the profit or loss of the period can be calculated accurately. Then profit, the operational profit or the operational result will be a relevant and accurate one, as I told you earlier. And the third one, the assets, liabilities, and equity of the business as at the end of the period or the financial position at the end of the period can be accurately disclosed. From each adjustment entry, there will be an effect to the profit or loss statement and to the statement of financial position. So thereby, in preparing the profit or loss statement, incomes and expenses will be affected. When it comes to the statement of financial position, the values of assets, liabilities, and equity will be changed. So in order to give an accurate figures in both the statements, then these adjustment entries are important. Then the fourth one, the financial statements can be prepared according to the accepted policies and standards. Now, at the beginning of this lesson, I have introduced you some concepts. So actually, they are also can be known as the policies or the standards. There are a certain set of rules that which we have to adhere when we are preparing the financial statements. So when we are doing the adjustment entries, it also helps to maintain the accepted policies and standards of accounting as well. Then the stakeholders of the business can use the accurate information to make accurate economic decisions. Thereby, when you give true figures, 100% accurate figures, the stakeholders are in a position to take their decisions or make their decisions 100% accurately. Then let's see what the relevant adjustment entries for a sole proprietorship business, because in our syllabus, in O-level syllabus, we are only preparing the financial statements for sole proprietorship businesses, and we will be following basically four types of adjustment entries. The first one will be the accrued expenses. The second one will be the income receivable adjustment, and the third one will be the bad debts adjustment, and the last one, the adjustment for depreciation. So basically, in my next few videos, I will be paying my attention towards these four types of adjustment entries, which you will be tested at the ordinary level examination. Now, I hope you all have a good understanding or better understanding about why the adjustment entries are needed and what the adjustment entries are to the financial statements. So now I'm going to explain these adjustments one by one in detail, because it's very important for your examination and for your knowledge as well. And you can be tested in different angles, in different manners in the question paper, in the first paper itself and the second paper, basically in the last question, preparation of financial statements. Okay. So thereby we'll move on to the first type of adjustment entries, which is known as accrued expenses. Let's see what these accrued expenses are. Expenses that an organization has incurred for obtaining the goods and services for a specific accounting period, but the payment for which is still outstanding. This is also called expenses payable. Accrued expenses or the expenses payable. Expenses to be paid are known as the adjustment of accrued expenses. Now, accrued means, now you know what the accrual concept is. So thereby accrued expenses are the expenses which we have not paid during the accounting period, but which is relevant for the accounting period. And when we are showing the financial statements, when we are preparing the financial statements, it is a must to show them. But actually they have been identified after preparing the account. So thereby now it's our duty to adjust them in our financial statements and show them and present them to the stakeholders very accurately. Now, they tell when a business unit or a business organization is obtaining goods and services. I mean, when they are trading, when they are buying and selling, or when they are doing the main operation of the business during an accounting period, there can be lots of payments, means the expenses which is still outstanding, which we have not been paid yet. So these, the way that we are going to do accounting for these outstanding payments will be known as accrued expenses. Okay. Then the value of accrued expenses is treated as a current liability of a business. The amount of the value, or the amount actually, the amount which is accrued, which has not been paid by the business, will be treated as a current liability. Right. Now that is the introductory part of this accrued expenses. Actually here we are going to try to give you a picture of these accrued expenses. Now next part we'll see how we are going to account for this accrued expenses. As I have told you earlier, some examples for accrued expenses will be the payment of electricity bill for the last month or the last few months, the interest, bank loan interest which is payable to the bank loan that you have been obtained, rent expense, insurance expense payable. All these are examples for accrued expenses. So when you are doing that, what will be the accounting treatment for that? How are we going to treat this from an accounting point of view? So that can be done using the double entry principle. So this double entry will be also known as the journal entry. Let's see what this journal entry is. Okay. When we are doing this accrued expense adjustment, the relevant expense account we will be debiting, and we will be starting up a new account called accrued expense account, and we will be crediting that. Again, the relevant expense account, let's say if it's an electricity, it will be the electricity expense account. If it is telephone expense account. If it's a bank loan interest, it will be the bank loan interest account. So like this, the relevant account, relevant type of expense account will be debited, because we know already all the expense accounts are debit balances. So if we have to pay more, then the same expense account we will be debiting more. Right? Then if it is the telephone expense, we will be starting up a new account called accrued telephone. If it is telephone, we'll be opening up a new account called accrued telephone account, expense account. And that new account we will be crediting. Why? Because we told that it is going to be a current liability of the business. How come? How come it becomes a current liability of the business? Because in another few months' time, or during the next accounting period, we are going to pay this. So until then, it's a liability of us. So thereby, we will be treating it as a current liability. After you settle that, there can't be a current liability like that in a statement of financial position. Until then, it's a current liability. Since it's a liability, always we have been credited the liability accounts. So since accrued expense account also a liability for us, we are going to open up a new account which is relevant for the type of expense that we are treating, and we'll be crediting it. Right. Now, you will be very clear if I illustrate this to you using an example. Before that, I like to show you the way that we are going to show this in the two financial statements, or this will be the extracts of the financial statements. According to this example, this is the profit or loss statement extract, and this is the statement of financial position extract. So therefore, this business, according to the example, this business has paid, I mean, the amount relevant for the amount, the insurance expense, which is relevant for the period, will be 6,000. So that they have showed, the full amount they have shown under the profit or loss statement under expenses. Then the rent relevant for the period will be 96,000. And the bank loan interest relevant for the period will be 6,000. So these are the full amounts, the amounts relevant for the period. In the statement of financial position extract, they are going to show them the amount which is not paid, which is to be paid, or the payable amount of each expense. So here the full amount is 6,000, but the accrued insurance will be 2,000 rupees only. The rent amount for the period will be 96,000, but the accrued rent will be only 16,000. Again, the bank loan interest for the period will be 6,000, but accrued bank interest will be only 1,000 rupees. So always after doing the adjustments of this accrued expense, the amount which is relevant for the period, the full amount, as we have mentioned in the accrual concept, irrespective of whether you have received an income or paid an expense, the amount which is relevant for the period should be treated under profit or loss statement. The full amount, the relevant for the period, must be present under the profit or loss. In this case, in this example, no incomes, they have given only the expenses. Most of the time, accrued adjustment will be coming under expenses. So thereby they have shown the expenses. But then when you are doing this, there will be some amount which you have not been paid. The amount to be paid by the business, until we are paying it, it's a current liability of the business. So it is our duty to indicate them under current liabilities. So thereby insurance expense, 2,000 they have not been paid during the period. Rent, 16,000 they have not paid during the period. And the bank interest also they have not paid 1,000 during the period. So then these will be paid in the next accounting period. So until then, they will be treated as current liabilities. It's very, very simple. Okay. I like to move on to this activity given in your textbook with regard to accrued expenses. We'll have a look at it. The accounting period of Nayanee's business ends on 31st December 2019. Let's consider. The transactions done in the business are given below. Now, they said monthly rent for the shops is 5,000 and only 8 months rent has been paid. second adjustment. All these are accrued expense adjustments because it can be tested in different ways. And here they have given you all 6 types of all 6 patterns which you can be tested at the exam. The same accrued expense adjustment can be given you in 6 different ways or 6 different types. So in the exam paper, you will be getting 1 or 2 of this accrued expense types. So let's see what the possibilities are and let's see how we are going to calculate this. So this is very easy. So monthly rent for the shop is 5,000. The first one. Second way, 18,000 rupees has been paid as the electricity expenses. Electricity expense of 3,000 relevant for the month of December has not been paid. So thereby when you read that, you can see business has to be paid some more earlier also like that. The third one, they said bank loan has been obtained for 80,000 on 1st January 2019 at an interest of 12%. The interest for the month of December has not been paid. Again, the business has to pay some amount to the bank. Accrued telephone expense as of 31st December 2019 is 3,000. Again, there's an amount which is accrued or to be paid. Carriage expenses of 2,000 is to be paid. They have expressed this directly. And the last one, 6th one, they said the annual stationery expense is 19,000, but only 5,000 has been paid. So in all 6 cases, you can see some amount the business has not paid. So thereby they will be considered as accrued expenses. 6 different types of accrued expenses they have given in this activity. Again, to mind you, at the exam, you won't be getting 6 different types like this in the last sum. The examiner will test you in one method or in 2 different methods. Most probably, it will be only one adjustment with regard to accrued expenses. Okay. Now, when you are given a sum like this, the first thing that you have to clear about the sum is you have to have a better understanding about the accounting period. So here the accounting period will be ending on 31st December, they said, with relevant to 9 is business. So thereby, here I have worked out our accounting period will be the last date is 31st December 2019. So when you calculate 12 months forward, you will be ending up with 1st January 2019. So the accounting period of 9 is business will be starting from 1st January 2019 to 31st December 2019, which consists of 12 months. Okay, so in the first one, they said monthly rent for the shop is 5,000 and only 8 months rent has been paid. So you have to use your common sense. They have paid monthly rent only for 8 months. For a 12 months period, for an accounting period, there are 12 months. So then another 4 months are there for the rent to be paid, which they have not been paid. Thereby, with regard to rent, the amount that they have paid in cash is 5,000 per month. No? 5,000 into 8 months, 40,000 they have been paid already. Then accrued rent will be the 5,000 into the next 4 months which they have not been paid. That is the accrued rent actually, which is 20,000. So thereby the total 40,000 is the amount that they have been paid already. 20,000 is the amount which is accrued or to be paid. And thereby 60,000 will be the total amount Nayani must paid on behalf of rent expense and which she should be shown as rent expense in the profit or loss statement. 60,000 is the total amount that she should have been shown in her profit or loss statement. Then this 20,000 will be known as accrued rent, and it will be shown under current liabilities of the statement of financial position of 9's business. 60,000 is the total which is going to be shown under the profit or loss when you are calculating the operational results or the profit or the loss of the business during the period. And this 20,000 will be indicated in the statement of financial position under current liabilities and accrued rent. So then the double entry will be debit rent expense account 20,000 and credit accrued rent account another 20,000. Right. I hope it is clear to you. Then we'll move on to the second one. $18,000. Now, in the next slide, this is the adjustment of rent. Okay, then let's see the second adjustment. Then we'll move on to the second example. ₹18,000 has been paid as the electricity expenses. Electricity expense of 3,000 relevant for the month of December has not been paid. So again, 18,000 they have been paid. Paid amount is 18,000. 3,000 is the accrued amount. So then the total electricity bill will be 21,000, and the 3,000 will be the amount which is accrued. So that must be shown in the statement of financial position under current liabilities as accrued electricity. The total of 20,000 must be shown under profit or loss as electricity expense. Then bank loan has been obtained for 80,000 on 1st 12/2019 at an interest of 12%. The interest for the month of December has not been paid. Again, the last month last month interest is accrued. So thereby, 80,000 is the total loan amount. 12% of that will be 9,600. So that is for the whole period. 9,600 is for the whole accounting period for the 12 months. So that 9,600 must be shown as bank loan interest expense in the profit or loss, whereas the per month interest, which is going to be 800, 9,600 is the total. When you divide it by 12 per month, the amount is 800. Or the accrued amount will be 9,600 minus 8,800, which 90 has been paid, so thereby the accrued amount is 800. Or directly from here also you can take it as 800. So this 800 will be the accrued amount of rent, and 9,600 will be the total rent, which you are going to show in the profit or loss. This comes under current liabilities in the statement of financial position as accrued bank loan interest. Then the fourth one, they said accrued telephone expense as at 31st December 2019 is 3,000. I mean the whole 3,000 which is relevant for the period ending 31st December 2019 has not been paid by 90. The total amount is accrued. Thereby you have to open up a new telephone expense account, and debit 3,000 there and credit accrued telephone expense account by 3,000. The full amount is accrued. 3,000 will be shown in the profit or loss, and on the other hand, in the statement of financial position also, under current liabilities, you have to say accrued telephone expense and show it as 3,000 rupees. Carriage expense of 2,000 is to be paid. Again, the full amount, full carriage expense is accrued. So thereby, 2,000 carriage expense must be shown under profit or loss, and as a current liability in the statement of financial position, you have to show accrued carriage expense 2,000. Stationery expense. They said the annual stationery expense is 19,000. I mean the whole amount which is relevant for the period, the total amount will be 19,000, but only 5,000 has been paid. Therefore, the amount which have been not paid will be 14,000, which is 19,000 minus 5,000. So 19,000 must be shown under profit or loss as the stationery expense, and 14,000 must be shown as the current liability in the statement of financial position. So like this is the way that you are going to calculate the figures mathematically. And after that, the recording of each adjustment in the general journal will be required, and posting them to the ledger accounts also will be required. So in my next video, I will hope to show you the general entries in the general journal and the relevant expense accounts. But this is not difficult for you. From here, you can get the total amount, and that should be shown in the profit or loss. Then here the electricity account, here the rent expense. Like that, for each expense, the accrued amount will be credited by opening up the relevant accrued expense account, and the total will be taken to the profit or loss. But better way is to show you an example. I will show it in my next video, and I will like to meet you there with an extension of the accrued expenses, general journal, journal entries and the ledger accounts, and we'll move on to the income receivable adjustment as well. So thank you very much. Hope you all have a understanding about the adjustment entries and the first type of adjustment that we have been discussed, accrued expense adjustments. Okay, thank you very much. Hope to see you in my next video.